How's it going, fellow traders? This is Magic Trader here, and this is your weekly Forex forecast and a look inside the latest CFTC data by the institutions that was reported on September 14th. And as we always begin, let's start by taking a look at gold and see what we have here. Okay, so gold. What's been taking place? We got very aggressive long positions that reached up to highs of 311,000, and then we start seeing some profit taking on long positions. Now this has fueled a move to the downside here. Now remember, we're still inside a major institutional area of demand. This area of demand has been contacted several times, and so it's becoming weaker and weaker the more it's being contacted. What we would like to see is an accumulation of a long position, as it has been traveling sideways here within the zone, and we've seen that to a certain extent, but up until 311, and then we see some profit taking. Now at the same time, I will point out that up at these highs, retail traders were getting in significant long positions, so that could be one of the reasons why the institutions decided to reverse price. So we'll be watching to see if it continues with this momentum to the downside in the coming week. Next we have oil. And oil made that move up that we were talking about. Do you remember we were talking about this move up because we had the institutions contact this area of demand, okay? This was institutional buying that was taking place here. And so we knew that it was very likely going to rally up until it contacted institutional supply. So now that supply has been contacted, what is going to come down? Well, let's look at the positions and see. Supply has been contacted. We can see that there was a slight increase in longs. Well, that was what would help fuel the move to the upside. And at the same time, they were adding somewhat to their short positions, 154, 159. They took some off in the last couple of weeks. Bottom line is they're mostly bullish rather than bearish. But then again, we know that with oil, they typically are. So here we are. We're at supply. This cannot go further. Price will not be able to go higher unless this area is removed. So that is what my focus of attention will be on, to see if that area does indeed get removed. Now the dollar. We're looking at the positions here, and let's take into consideration that this is September 14th. We had contracts expiring at this point, okay? So we see a slight increase over the last week, nothing big, but take a look here. Short positions used to be 15.2, okay? They used to be 15.2 in August. Now leading up to the contracts expiring, what did they do? They dropped positions from 15 down to 10,000, okay? So right now they're situated with only 10,000 short. Now why are they situated 10,000 short? Could it be in preparation for this massive move up? I mean, that's a possibility. I wouldn't bet my money on it, but that is a possibility. When we look at the colorations of the cells, we can see that we've gone from neutral and now we're entering into bullish territory. So that is a good sign for a continuation of a move up. But you also have to consider that we do have an institutional area of supply that's still in play. And as long as this supply is in play, we can't disregard the fact that this could actually take place on the charts, okay? So we'll need to see this removed before we can see any more upside. Now in terms of the Aussie, over the last few weeks, take a look at what's happened with their long positions. They went from 64,000 down to a very cooled off 13,000. Now remember, contracts did expire, so that could be telling us that they're not very interested in holding long positions. Why? Maybe they are planning on taking price much further down the chart, but I wouldn't jump to those conclusions just yet, because this could also be because of contracts expiring. Now with the contracts expiring, they have to get out of their positions. That means they have to get into new positions. But on the 13th, the contracts expired. On the 14th, we still see them very low with long positions. They could, over the next few weeks, start to build up more longer positions. So we'll have to see what happens at least this week. Let's get one more data release and see what they're doing, and then we'll have a better indication. Okay. When taking a look at the charts, we have to understand that we have a major area of demand here. This was created by the banks. If they remove this area, then we can see a big drop in price. But with that area of demand still in play, we have to wait and be careful with jumping into any conclusions about what we are expecting. Yes, the coloration of the cells are deeply red, but I'm going to give it this week to see what they do with price, whether they continue to push it down or whether they start to reaccumulate that long position. But this is definitely on my watch. USCAD. So we see with oil that it's rallying up, and there's a good chance that it's going to remove that supply zone that we were talking about. And if it does, it will be stronger. Okay? But if it doesn't and it holds that supply and drops price, then it will be weaker. And what we're seeing here is strength in the CAD, right? The only thing is that we had that major area of supply on the dollar. And if that supply holds price, it will bring back more weakness, all right? If the supply removes, then we can expect a move up here, at least to the 130s, all right? And so this will be tied in with oil, so I'll be watching oil very carefully and comparing it to what I'm seeing here. Now we have the coloration of the cells telling us that the institutions are neutral, even though there's net positions in the positive side. So let's remain focused on this one as well throughout the week. US Swiss franc contacted demand, and we said with demand in play, price will likely want to gravitate to the opposing supply, and there you have it. It's heading towards there. It's falling short, but we have another week, and we think that there's going to be a slight push up. Okay. Bottom line is weekly chart is in a range. We want it to break out of this range to give us better momentum. So we'll be watching to see what takes place this week. Euro US dollar, we look at this one, we have major institutional demand that's in play here. And as long as this demand holds, there's the likelihood that price will just continue higher, even though we see a lot of shenanigans here. Okay. Bottom line is they used to be bullish. Now it's turning more neutral. Okay. And leading up to contracts expiring, they did close off some of their longs, and but they also closed off some of their shorts. Okay, got to be patient with this one as well. We have demand in play. Let's respect that until it's removed. Pound US dollar. This was doing just about nothing. It's curling over. Could it drop? Yes. If the euro drops, dollar rallies. Obviously, that can happen. But leading it into contract expiration, they did something big here. They dropped their long positions from 36,000 down to very cool off 29,000. Then all of a sudden, a big jump. Okay, 29 to 44. At the same time, they reduced their shorts. Not much going on here. I think there's a inclination for price to want to drop. We analyzed this chart on a much deeper level in a level 3 session, and we did notice that there was significant supply in play here, and it's putting significant amount of pressure to the downside, which could be the very reason why price has been coasting sideways for multiple weeks. So we'll be watching that one for more signs in the next week. US dollar Japanese yen, not much here. It's been going sideways. Okay, we've been watching this one for quite some time. It needs to break out of the range. Otherwise, there's nothing really going for it. Yeah, we see the sentiment is bullish. It is contacting supply. That's why it's sitting sideways. Could it just jet up like this? Yeah, absolutely. I'd like to see this area of supply get removed first, though. Okay, and last but not least, we've got the Kiwi. And Kiwi also contacted supply, was moving down. It's fallen short of hitting demand. And based on what I'm seeing with all the other charts, there's a good likelihood that over time we can see price drop like this. Obviously, there's going to be chart signals on the lower time frames, which we'll discuss in school. But I think there is a good chance of that happening. We take a look at the sentiment here. We see that it was bearish, turning a little bit bullish here. But that's just because of all the big changes in contracts with the contracts expiring. But I will be watching this one for that push lower. Alright, ladies and gents, so there you have it. There's your CFTC data and your weekly Forex forecast for you.
If you need to reach us for more information, you can reach us at www.whiteoakfx.com. Thanks. Have yourself a good one, and have a great week.